Okay, so how do you get an OPG? Again, well, this is my credit, my business credit. We are on, let's show people. Smartbusinessreports.com. This is just Experian Business. Just Google Experian Business, pay $200, and it'll show you this. You need, here I have a 27. That's horrible. I need an 85. Okay, so with an 85, I can go ahead and apply with the EIN only. Okay, I need an 85 credit score with two trade lines that equal 200,000. Okay, I just explained to you how do you get trade lines that equal 100,000? Well, there's two ways. You buy them. Okay, you can buy them through me, or number two, cheaper, easier, faster. You got a couple friends that have businesses. You put in here. Look what it says. Don't see all of your business and trade line accounts listed above. Boom, submit here. Okay, what do we submit? Company name, supplier, your phone number, your email, your URL. We press submit. They're gonna call you. Hey, Miguel, have you done business with Blueberry Rentals? Yes. Okay. Since when? Past 5 years. Okay. How much have they bought from you? They bought 200,000. Okay. Send us proof. Oh, okay. Um, do they have an account with you? Yes. How much? 200K. They spend about 200,000 a year. Sure. All they do is they go in there and they input it manually. So now you have a trade line. You see what I'm saying? So I can put you, or I can put in and say, my mom right now, I just bought her 3 businesses. Okay, I bought her 3 businesses to do this whole thing, which is what? She bought 3 businesses. We're inputting 2 trade lines that equal 200K, and then we're gonna go for funding. EIN only. No personal guarantee. Personal guarantee is okay. You have a business credit card, right? Right, Miguel?
Yeah.
Okay, you have a business credit card. Whenever you apply, you guaranteed it. Okay, so they pull your social security number, they pull your personal credit score, and they gave you a credit card based on your personal credit score. Okay, how do you get a no personal guarantee? When I say no personal guarantee, I'm talking about if the business was to fail, you're not gonna lose your house, you're not gonna lose, your car. They're not gonna be bothering you. Okay, why? Because
Yeah.
when you apply, instead of you putting your social security, you put in your EIN. So what the EIN does, they go in, they pull Experian business credit. They pull Experian business credit. Okay, well, this guy has 2 trade lines of 100K each. We can give him 25K. And what do? You go to 6 different banks, they give you 25K, and then we go get a loan or a line of credit of 150K. You see what I'm saying? That's the process that we do. So if anybody that has 85 plus on their Experian business credit, they can come through us. We do the back end for them. Okay. And this is no personal guarantee. Obviously, we do charge a percentage on the back end. Okay. This
What's the fee?
is a 10% back end fee.
So 10% of whatever funding you acquire.
Correct. Correct. So it's on our best interest to get you as much money as possible. Okay. If you are going to invest on my company, which is the trucks, it's a 5% back end fee. Okay. What is people doing? What are we doing? I'll tell you something. I bought 10 companies. Okay. 10 LLCs with 2 trade lines in each. We're just waiting for them to report at this point. Okay. We already have one of them going into funding. Once they report, we just got one of them that reports. Once the other ones report, we're going for funding. No personal guarantee. Okay. That doesn't mean you can just grab the money and run. People do it. Okay. I know people, they bought 25 companies, they go drain the account, they get fucking $4-6 million and they bounce. Okay. They will go after you. That's fraud. Okay. But if you're grabbing the money and you're putting it in a legit business and the business legitimately fails, guess what? You're not responsible because it's backed up. It's backed up by the company. It's backed up by the company assets. Okay, and not only that, banks are insured. People don't really know this, but banks are insured. Okay, as long as you make the first 3 payments, their insurance kicks in. You see what I'm saying? So you get a $25,000 loan, you make one payment, $300, 2 payments, 300. After the third payment, their insurance kicks in. Well, banks are secure. Some banks after the first payment. Okay, national banks after their first payment. Why? Because they have more of a the process of the loan of you to get the money is a little bit more harsh. Okay.
Now these loans are these are loans like SBA loans, not credit cards.
No, these are credit cards.
Oh, these are credit cards. Okay.
Yeah, that's why we go to 6 different banks and then we do a loan or a line of credit of 150K.
You do a what?
A line of credit.
A
Okay.
line
So
of credit.
yeah, so that's what I'm letting you know what I'm seeing on the back end. We're getting about 5 to 6 credit cards of 25K and
Mhm.
$100 to $150,000 on a line of credit for the business.
Okay. And that line of credit functions like a credit card, or is it like they put
The
it in
line
your
of credit,
bank or?
no, that line of credit is attached to your account. So you go to the bank, you open an account with your business, they attach the line of credit to the account.
Mhm. So you got you said 6 credit cards to 25,000. So that's like 150,000 and then another 150,000 on the credit line.
Yep.
And
And
so
this
for
is,
you, say again.
and this is no personal guarantee.
So let's say you got 300K, no personal guarantee. Are these I'm guessing these credit cards have some kind of introductory offer, or are these
Some,
interest?
some do, some don't. So I'm
Mhm.
seeing 0%, I'm seeing 6%, I'm seeing 15%, I'm seeing 24.99%. So some do,
Mhm.
some don't.
Mhm. And then the credit line, what about the credit line?
The credit line, I think we have 7%.
And
7
so let's say you get, okay, so you get 300,000, you would charge 10,000 at
30
at
grand,
that
30 grand.
30 grand, sorry.
Yep. And if you're
Got
investing that money to the trucks, the profit is split 50-50, I charge 5%. And that's because
hmm
there's a partner within the business that he has nothing to do with the truck, he's gonna just get his money.
hmm
So what am I doing right now? The trade lines are very scarce to come in. Okay. Because a lot of people want them. So they go for a high price. Okay. Right now, we're not getting any until June. Okay. I bought the last batch, which it was 10 of them. I bought 10 companies, 2 trade lines in each. Okay. And then I'm also for my business, I'm fixing it so I can get more money.
hmm
You know what I'm saying?
And this is different from, okay, so you mentioned the SBA loans. This is different than an SBA loan.
Correct. This is just to get no personal guarantee.
Got it. The SBA loan is personally guaranteed.
Well, the SBA, they'll, depending on the bank. So the SBA, all they're saying is, hey, we'll back you. The bank is going to give you the funding. They're going to back 90% of the loan. So if they loan you $1 million, they're going to say, hey, if he default, we're going to guarantee 900,000.
Uh-huh.
You see what I'm saying?
Yeah.
Okay. So
So they'll come after you for whatever, 100,000.
no, because most banks are requiring 10% down payment.
Got it. Got it. So you're already, that's your part already.
Exactly.
Got it. And then for those kind of loans, what kind of interests are you seeing?
SBA loan, I haven't done any SBA loan. Okay, but from my friend, what they're seeing, it all depends on your credit score. Okay, between 6 and 9. So it's not that bad. If you can double your money, you know what I'm saying? If you can double your money, hey, that's simple, very easy.
And that SBA loan with them guaranteeing 90%, that's just a standard SBA loan.
Yep, standard SBA loan. So SBA is just a guarantee, it's the government guaranteeing it. So
Uh-huh.
just how you do, like you mentioned the other day, Freddie Mac, FHA, or just how you do a VA loan. Me, I do a VA loan. I go and apply. My loan is backed up by the federal government reserve, which means if I default on my $100,000 or $1 million property, guess what? They have a guarantee,
Mm-hmm.
the United States.
Right.
You know what I'm saying?
Right.
So it's just a guarantor. That's all it is. SBA is just a guarantor, but they have their guidelines. Hey, make sure their personal credit score is this, make sure the business credit score is this. We do a combination. And if you approve them, great. We can guarantee 90%. We can guarantee 90% of the loan in case they default. So it's just
Mm-hmm.
your partner, your guarantor partner.
Mm-hmm.
That's all it is. And it's only for small businesses up to $5 million. So it's keeping a lot of people, a lot of big companies, just takes them out. Because they're not gonna
Yeah.
go apply for 5 mil. 5 mil, to be honest, dude, it's not a lot of money, man. There's a lot of money. There's a lot of money out there.
Yeah. Yeah.
So I mean, obviously, I'm all for don't use your money, use the bank's money.
Right.
And like I told you before, right now I'm doing this to 10 different companies. Okay. 3 are under my name, 3 are under my mom's name. Um, I sold 2, I have 1 left. Okay. And why am I doing 3? Because that's the limit that we can do per person. Why is that the limit? Because we're going through the same banks to get the loan, because those are the banks that are giving us the money. So put it this way:
Mm-hmm.
have 3 companies under your name, Miguel Contreras, and you go to Chase, they give you 25K. You go to Chase again with another company, they'll give you another 25K. You go to Chase with a different company, 2 different companies. After your 4th one, they're gonna start like, okay, what is going on? They're gonna
You
start to
mean you mean you mean three different banks?
no 3 different names because we're using the same bank. So me, I have 3 companies that I bought that I put under my name. Why? Because we're going to smaller companies that are in Colorado.
Okay.
Okay, we're going to a small banks.
Mm-hmm.
Okay, we're going to small banks with different entity names.
But yeah, okay. But you're still the owner. They see your name.
Exactly. So after the 4th one is I don't want to say a red flag, but it's like, hey, okay, what's going on? They have 4 different companies.
Mm-hmm. Yeah, so you go for one bank with three different companies with you, then another one with your mom.
Correct. And then another one with correct.
Yeah.
So that's why I
And do
got
you do
10.
multiple banks?
We do it to 6 different banks.
And these just random credit unions you find it like, or
No,
is there any
they have
criteria?
to be no, they have to be within 60-mile radius of your business location. Okay, but they are credit unions.
60-mile radius.
Yes, 60-mile radius.
And
That's
why Colorado, bro?
what's that?
Why Colorado?
Colorado is where they have. So we buy these companies. Okay, we buy companies that have age. So one of the requirements is also you need 2 years of age plus. Okay, and that's where we're finding good names that we can buy. So we buy the corporation, we buy them. Why? Because they were open a while ago, or somebody opened it and then they didn't pay their dues. So we go pay the dues and then we take the company over. Or the name per se, their name. Okay, then we
When you
go.
mean when you say dues, you mean like somebody didn't pay their credit card or they have their collections or
No, somebody didn't pay to register with the state secretary. You got to pay every year.
Hmm.
Okay, so somebody didn't pay that. It's up for, hey, they'll sell it to us, but then we got to go and pay that, you know? So I mean, it's a whole business model. People open a lot of names and then they sell the names. Why? Because of the age.
Hmm. Even though there's no business transactions or history.
Exactly. Yep. They don't ask any of that.
Got it, got it. Even when you go to the bank, as long as you have the 85 plus and the trade lines.
Two trailers are equal to 200K, an EIN number.
So it doesn't matter if you have any transactions as long as you have those trade lines.
Exactly. Because they count as if we're transactions. Because you have $200,000, what's an extra 25K?
Yeah.
You know, so
So
that's how
you're doing this with how many companies?
10. There's
Dang,
three
bro,
under
that's a lot
my
to.
name, three under my mom's name. I sold two. I got one
Yeah.
left.
And what do you do with all of this? Like,
Oh,
you just
I'm putting into my trucking business.
you just dump all the money into the trucking business.
Yep.
Yeah. And it's not personally guaranteed. So,
Exactly.
I mean, it sounds like it's a pretty solid business model. So,
Exactly. So what I'm doing is, hey, I offer people, hey, I can get you the money. You know, there is a 5% back end fee if you dump the money into the trucking business.
mhm.
You know,
And remind me that trucking business. Let's say you get 300,000, you put it into 300,000 into the trucking business.
60K each. That is 5 trucks. You make 100% of back your money in 2 years. So we're splitting the profit
60K.
50-50.
You said you make all that 300K in 2 years?
Yeah, profit. The investor does.
When you mean profit, so let's say because you have $300,000 in credit lines, you're paying some kind of interest on that.
You pay is either 2% a month, and that the first year, depending on the credit card, usually goes to principal. Okay, but it's either 2% or I believe it's $50 or $25, I can't, or $20, whichever one is highest. So
Mhm.
it's either 2% or the $20. But you
Mhm.
make the 300K in 2 years.
Including with paying all the interest. I mean, you're talking about 300K in your
No,
pocket.
I'm talking about you dump 300K, you're gonna make 300K, not including the interest. You make 300K in 2 years. You know,
Mhm.
that's
Mhm.
because we're splitting the profit 50-50. You know, so
Mhm.
it's more like a passive, which that reminds me, I'm going through an attorney to do the document to go through the SEC because I do have to be regulated by the SEC in order to quote unquote be legally and raise funds, you know?
Really?
That you cannot,
Huh.
yeah, I'll tell you the requirements. You can either be a credit investor with $1 million in assets, you can have a household. These are the qualifiers, okay? Either $1 million in assets or a household bringing in $300,000 together. Okay, and then you have what is called 506B or 506C. 506B 506B is like friends and family. So people that you know that, and they consider friends and family people who you have met at least twice. 506C is you introduce me to somebody that has money and they are accredited or they have invested in the past.
Mm-hmm.
Okay. So the SEC requires to know who are the people providing that money, and you got to sign, hey, they sign, you're not laundering money. Um, there's no malintent. Okay. Because you can go to jail for malintent. There's no malintent. There's a couple requirements that they have you check off.
Does this apply to real estate as well?
It does.
Because I heard about that for real estate.
Yeah, it does.
So for friends and family, you can raise money from friends and family.
You can. Friends and family consider people that you met at least 2 times.
Mm-hmm.
You still got to register with the SEC.
Oh, really?
Yeah.
You still have to register.
Yeah.
Huh. That's
There's
good to
ways
know, bro.
around it. There are ways around it. For example, I mean, dude, I know a guy had raised $300 million, okay, to put into the Amazon stores. So I don't know the ways around it, but I know there are ways around it. Like, for example, if you do like a possible equity, which they're being part owners of it, there's a little gray line, but there are ways around it. There
Yeah.
are there are a
No,
lot
that's
of
good to know. Yeah, because I've had like three people tell me about real estate. They see me doing a few flips or whatever, and just say, hey, like, if you find any deals, like I have some money, and I'm just kind of like, oh yeah, sure, whatever. But I thought about it like, hey, if I need some money, if I need if I find a good deal or whatever, and they want to put the money up.
Let me
But I remember somebody mentioned something about the SEC,
yeah, you do.
unless it was friends or family.
Yeah. Look, I was looking at what you sent me earlier. If this doesn't motivate people, Miguel, in order for you to get to this level, for me, for a lot of people, this is probably like a $15 million mansion. This is in Miami, I think. No, New York. Look, this is in New York. Okay, or no, that's the Wiz Khalifa. This is on
That's Dubai, yeah.
that's Dubai. Yeah. You know, private equity is the way to go. Okay. When I say private equity, I'm talking about
Yeah,
raising money from a lot of people.
raising money, dump into a business, scaling it, sell it.
Not necessarily dump it into a business, but you can dump it into real estate.
Mm-hmm.
If you can already find deals, it's just about raising the capital. I get
Yeah,
good, to be honest. I got, when I was doing real estate a while ago, I still get contacts on my email. Hey, I got this property. I still get texts. Hey, I got this property. And most of those people are solid. They're wholesalers, so they want $10,000 on top of whatever they got it for. Or they'll
yeah,
give you a price. More savvy wholesalers, they bring all the investors in at once, and they have all of them fight. Hey, what do you offer?
yeah.
They sell it to the highest guy. So I'm telling you, man, if I was you, Miguel, again, raise money, go all in, bro. There's a lot of opportunities. I will say either a hedge fund. Why a hedge fund? Because hedge funds, you're paying people 13 to 15% APY. You keep their money for 2 years. Okay.
I'm not familiar with a hedge fund.
But all a hedge fund is a pool of money. So you know how they have retirement funds.
Hmm.
All your money, or when you had a W-2, if you ever had a W-2, anyone has a W-2, they take money every month. Okay,
Yeah.
why? That's your retirement, because by the time you retire, the government's gonna give you back your money, 2,500 a month or $1,000 a month.
Right.
So a hedge fund, the only difference is people are willfully putting their money into your hands.
Hmm.
Is there a lot of risk? 1,000%. Is there a lot of money on play? Is there a lot of stress? 1,000%. But stress is correlated with a lot of money. If you can handle a lot of stress, you can handle a lot of
So you say, okay, so you say like hedge fund people give you money to manage it, dump it into a good, like some kind of
exactly.
investment.
Yep. 1,000%.
But same thing, you have to be regulated by the SEC? Do you need any specific certification or
Yeah, you gotta take
qualification?
for a hedge fund, you have to take a state exam, give you the qualification of who you can raise money from, who you cannot raise money from. You do have to abide by other laws, and you do quote unquote put them on a payroll, because you do have to pay them every month until you reach a certain amount. Like they say, for your first $100 million, you do have to pay an X amount of money for them to check who are your investors or where the money is coming in from.
Or you
And
have to pay the government?
yep,
Hmm.
okay. And there's a difference if you do an nationwide or you do outside of the United States. And to be honest, in my opinion, it's just a money grab. Okay, they can tell you, hey, we need to use different sources to see, if the person who you're raising money from, yada yada yada. Dude, it's just control. At this point, in my opinion, it's control.
Hmm.
Okay, that's just what it is. It's control, and it's a way for them to just have leverage over you, bro, and look at your things. Like, for example, with a hedge fund, you cannot use what's called clickbait, which is, hey, I'm showing I'm living this lifestyle, and then you raise money from people who
Hmm.
have that shiny object syndrome. Oh my, he got
Hmm.
money, let me give him more money. Okay, so
Yeah.
it prevents you from that. You can't really, I mean, you can do it with your friends. You can't really do it from people that just see you on social media. Oh, well, who are you? I'm a fund manager. Okay. You know what I'm saying? So that's where the term fund manager comes from. You're managing
Yeah.
a fund,
And so these people are just finding good investments.
bro. These people, yeah, pretty much not even finding good investments. They're just really good at getting capital. And then they're finding people like you. Oh, you got good projects? Okay, what are your projects? Okay, this one works, this one doesn't. Don't invest on it.
Yeah.
Obviously for a split profit. So they pay the investors 12, 15% APY, you keep the upside.
Whatever, however good of a deal you make it.
Exactly. Yeah. And every deal is different, when we talked earlier, I
Is
told
there
you,
a limit to like, is there a limit to the split?
no, dude, that's something that you make up. You're in control of that. So for
Hmm.
example, if I tell you, hey, Miguel, I'm gonna bring all the money, or you have a flip because 500K, but it's really worth 1.2, we're investing 200K. Okay. Worst case scenario numbers is $1 million because you want to refi, at 80% or whatever. So that's 900,000. So, hey, okay, we'll invest the money at a 15% return. We're putting all the money. You got the deal. We're putting all the money, 15% return that goes to investors. When we do the flip out, my company is going to be 50% owner of that property.
Mhm.
So all you're doing is just allocating the money.
Yeah.
You see what I'm saying? So if you have people already um, looking to give you money, I would suggest looking into private equity. Okay, that's where the real money is made, Miguel. I'm telling you, I talk to a lot of people, man, and I hear a lot of people, and you know, where the real money is made are creating good business and then exiting it, private equity. It's very hard to have a very successful business. You
It
know
is,
how
bro.
it is. It's tough. It's a hustle every day, and people want that thing. Hey, make sure it's running by itself. It's just printing money, you know,
Yeah. No, and yeah.
and it's
And
tough
like I
to
said,
keep it afloat.
like I was telling you, bro, like I'd rather now looking back. So I read a book called 10x is easier than 2x. I think I heard I was it was I heard it from Myron Golden.
Okay.
And essentially the premise of the book is that making exponential 10x leaps is much easier than making like 20% gains here or there. And the reason for that is that there are 100 ways to get a 20% increase, but there's only like one or two ways to make a 10x move. And so it just gives you a lot more focus. And usually the results are exponential. And so part of the book makes you kind of like retroactively think of what's the highest leverage thing you've done, you know? And I look back at the last 6 years and I'm like, holy cow, like real estate, my first duplex bought it for 250. Right now it's worth probably 650. My second house bought it for 190. I sold it for 500 last year. So made like 300K, just sitting. I lived in it like, the third house I bought it for my in-laws, bought it for 300, sold it for 400 like 6 months later, you know. And so then I realized like, holy cow, these are, I mean, it was easy. I mean, like you buy a house, you sign your documents, you get people to do some of the work, maybe do a little bit, and it's easy, you know. And so I compared that to how much freaking work it is to run a business. I was like, what am I doing? Like, why am I killing myself? If I can do literally like, 2, 3 flips a year, I'll make more money than what I'm doing, killing myself trying to run this business. You know what I mean? Especially if I can keep it, if I can keep the appreciation, the depreciation taxes, the cash flow, and then the discount, right? Because you make your money really on the discount. It's simple. And it's like one house, like right now, the one we're finishing, bro, I got it for 250. I put like 30K into it. So I'm all in 280. And I'm pretty certain we're not gonna sell it, but it'll most likely appraise for around 450, So that's like almost 200K in 2 months worth of work. I'm gonna refi, cash out, refi, get some money out, go play again. But yeah, and so, but right now what I'm trying to do is I'm really trying to do my research and get into for really five and higher units, because then you play with the cap rate, you play with the rents, you increase the rents and you increase the value of the property. And so I'm not really experienced with that, but I have a buddy of mine who that's what he does. He buys one, maybe two deals a year and tries to make a couple 100,000 in each. And that's it, buys the apartments, cleans them up, raises the rent. And then somebody, somebody will always buy it because it's at a certain cap rate that you can sell it for. So yeah, and so as soon as I feel a little bit more confident with apartments, I might look into raising money. I might do that,
I would, bro. I mean, what is your worst case scenario? You know what I'm saying?
especially with real estate. There, you really can't lose if you hold it. You can't really lose.
Correct. You either win at the beginning or worst case scenario, you'll win in 10 years.
Yeah,
There's a
yeah,
video that I have on YouTube. I'll have it sent to you tomorrow. How to raise money for real estate. Okay. And I'll explain it. to you. I'm just more detailing that video. It's called the rule of 10. Okay, so you'll understand it. Let's say I'm buying a million, and this works with single family and it works with multifamily. Okay, let's say I borrow $1 million for a fixer-upper apartment complex. $1 million. Once I fix it, it's gonna go to 1.3. Okay, so $1 million, I need to put in 100,000. So I'm all in for 1.1. Okay, I'm all in for 1.1. This whole scenario is investor, um, I don't want to say friendly, but it leans more towards the investor. Okay, so the investor gives you the 80%. Okay, so I'm sorry, the investor gives you the 30%. Okay, so you raise 300,000, you borrow from the bank 700K. Okay, you're doing the repairs. Okay, you're doing all the work.
Yeah.
The investor gets paid every month at 10% APY divided by 12. So what is 10% of $1 million? That's 100,000, right? 100,000 divided by 12, that's $8,333.
Wait,
Okay,
the investor gets paid 10% on the million?
no,
Why not on his
no,
30%?
I'm so sorry, on his 30%. Okay,
Yeah.
so he gets paid out of the 300K, 30
So
grand,
2,500 bucks.
30 grand divided by 12. So yeah, $2,500 a month. When you get to the point of refi, you pay him out his 300K. So it doesn't matter if it's 3 months later or 10 months later or 15 months later.
Yeah.
He gets his money back. He was already on a 10% APY, and then you keep him as a 10% owner of the property. Why do you do that? Because you don't pay capital gains on that money. So the 300K that you gave back to him is borrowed money. You see what I'm saying? So he got back his 300K. He was getting paid already for 6 months, 2,500. He's 10% owner of the property. What does that mean? That means with the extra 10,000 a month that the company that the building makes after expenses, he's getting paid $1,000 a month. So he got his money out. He was already getting paid while the money was at play, and now he's 10% owner of that property. What does that mean? 5 years down the line, when you exit, he's gonna make an extra, 150K or whatever it
Yeah.
is.
Yeah.
You see what I'm saying? So, dude, with this formula, and this was one of my first mentors, him is Brad. He went from $2 to $3 million guy to be a $500 million guy in 4 years.
So hold on. I'm not understanding why would I do that? Why would I give the investor 30% and 10%
No, you're giving
equity?
him only 10% of everything. You see what I'm
So
saying?
are you you're saying instead of giving him the 30%, sorry. Okay, so he gives me 30% of the value.
No, no,
So
exactly. He giving you 30% of the $1 million property. Yep.
300, he gives me 300,000 to invest. I'm paying him 10% APY. So
Exactly.
2,500 bucks a month.
A month.
Let's say I keep him on for 5 months,
Correct.
right? At 5 months, I refi, right? So the bank gives me whatever, $1 million, whatever, enough so that I can pay him his money, his $300,000 back.
Exactly.
So I don't get what the reason of after I pay him off, give him 10% equity.
Why? Because when you do that, that investor is not gonna go anywhere and you win them for life.
Hmm. So you're saying if he does that, as soon as I get another deal, he's gonna give me money right away.
Exactly.
Got
And
it.
this is the way to win investors, and all you'll have to do is making sure the project gets done and just getting deals.
No, that's brilliant, bro, because it's like for me, you know, I have you know, average ticket for my jobs are $400. But the lifetime value of a customer, let's say, is 1,500, over the next 2 years. But if I keep those people happy, because there's times where it's like they try to haggle or whatever, it's like, let's say I lose $100 because I agreed to their price on the front end. But now I have him on repeat for 2 or 3 or 4 other pickups for the year. So I lose $100 on the front end, but I gain another $1,000 over the next year. Similar concept. You're really buying their heart, buying their trust, buying their loyalty.
Exactly.
And
The thing
you
is,
have
you don't get paid until the investor gets their money out.
mhm,
So you're showing trust. You're showing credibility. Okay. This is the same thing. I'm talking to an attorney right now who's doing my memorandum for the offering that I'm gonna be having for the trucks. I want to do the same type of deal with with investors, because I understand that, hey, when it's time for my boy to exit the company, I want to be able to buy it. So I want to be able to make good relationship with people. Hey, he's exiting at 1.2 billion, $3 billion. That's cool. I'll buy it. I'll buy it. He gets paid. I do an IPO. I make 10 times that. I can buy it for $1 billion. I do an IPO, it's $10 billion. Why? Because people on the market are okay with making 15% return a year.
mhm, mhm,
You know what I'm saying? So if I'm buying it at 8 times EBITDA, worst case scenario, I buy it for $1 billion, I'll sell it for $2 billion.
mhm.
Worst case scenario. So I'm 2xing my money.
And you're saying that what did you say in regards to your boy?
When he's looking to exit, when he's gonna want to exit the company,
Mhm.
since I already have a relationship with him, I can buy the company.
Got it.
You see what I'm saying? So this is when I say it's relationships over profit. For example,
Mhm,
on the deal that we did with Isidro, I'm losing money.
mhm,
Why? I lost time and money. Okay, I paid him. He's been paid, but who's supposed to give you the money? Me. You know what I'm saying? So it's just about doing right by people, bro. If you do right by people, not only you get their trust, okay, but you will also get the recommendation. Their face is more valuable than, okay, making, a quick 10 grand. Why? Because Miguel, if you find a deal, let's say you find, okay, you're in the real estate business. You're like, hey man, I need $2 million and I can close on this deal and it's worth 5. You're gonna come and talk to your network. Hey man, how can I get $2 million? And
mhm.
if I can provide those $2 million, we're gonna make money. I'm gonna make money. You're gonna make money. Right? But if I'm like, hey Miguel, sorry, the guy hasn't paid me, I can't give you your full 10. And be like, okay, well, you're gonna think about me last. You know what I'm saying? So
Yeah. No, this is brilliant, bro. Like, this is infinite money. Like, you give up,
infinite money, bro. Infinite money for little money.
you give up 10% equity on a deal so that you can pretty much buy as many, you can have money right away for the next one and the next one and the next one.
And not only that, when they get their money back, since it's not that they're getting their money back, you're refinancing, meaning it's borrowed money. They don't pay
Like,
taxes on their 300K that they gave you.
wait, say that one more time. Hold on. I know you can refi, you get debt, you don't pay any taxes on that. So when they let you borrow,
They let you
oh,
buy the property.
okay,
They're
okay.
getting their money
So
out of the property. That means that since they are part
yeah,
owners, they don't pay taxes on it.
right, right, right. Yeah,
Miguel,
because it's part,
fucking
it, they're part owners, so when they refi, it's a debt that they're taking on, even though they're getting the money, so they don't get any tax. They don't get taxed on it.
They don't pay taxes on that money, Miguel. You see what I'm saying?
So they're happy because they got their 10%. They're happy because they got their 10% equity. They're happy because they're not paying taxes on it.
And they're happy because they're gonna get 10% perpetuity.
Hmm.
You know what I'm saying?
Yeah, yeah, of the cash flow.
Exactly. So there's no reason about being greedy because yeah, you lose, everything is imaginary, everything is fake. You lose $1,000 a month. Whoopsie-doo, you lose 12,000 a year. But that guy, he's gonna say, hey, how can I get another deal? So you have
Yeah,
another $250,000.
yeah. No, that's brilliant, bro. I mean, you literally broke my brain when you said give the guy 10% APY, pay him monthly, pay him out, and then give him 10%. I'm like, wait, hold up, what?
10%
Give
equity.
him 10%. Yeah, no, but no, that makes sense, bro. That's brilliant.
They don't
That's
pay taxes, okay, on their money out. And then when they do their taxes, they can depreciate 40% of that 10%. You see what I'm saying, bro? It's a win, 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 win.
oh,
It's
you're talking about accelerated depreciation.
exactly. Since
Like
they
they
are
can do it.
exactly.
Dang, hold on. So they make okay, so they get interest, they get equity, they get no tax
They get
because it's debt.
perpetuity and they get depreciation.
They get the yeah, perpetuity. So they get the perpetuity on the cash flow and the appreciation.
They get perpetuity on the cash flow. And then at the end of the year, when they're doing the taxes,
They're
okay,
accelerated depreciation.
exactly, they get accelerated depreciation because they are part owner.
Yeah, that's no, that's yeah, bro. I mean, this is so much value for an investor. It's like nobody treats an investor like this.
1,000%. And the person who does,
Usually, they're usually like begrudgingly agreeing to their 10%,
exactly,
trying to get them paid as soon as possible. But
exactly,
nobody's really structuring in a way to say, hey, you'll get equity, which when you refi, you don't pay tax on the profits you made. You get the cash flow, you get the appreciation, and at the end of the year, you get 40% deduction on your 10% equity.
exactly.
Bro, that's crazy.
I know. And that's the way to raise a lot of money. And then all you have to do all day, Miguel, is find deals and then get the workers. And that'll be your quote unquote headache. But as long as you keep those people busy, dude, and it's easier because if I was you, I'll start with single family homes. Dude,
Mhm.
start learning how to do three, five, six at once. Okay. You're gonna be busy, but once these people see people give you 100K, 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 and you put in your other 500K or whatever you have, and you're buying different deals, you're gonna have a little bit more pressure. Okay. At the same time, you're gonna reduce the cost, less materials, okay,
Yeah.
because less waste. You're gonna keep those people busy. They're gonna say, "Oh yeah, Miguel, I have another job here." No, there you go.
Yeah.
Oh, you're not doing the bathroom anymore. Go do the bathroom over there. So you just have, and that's how you can start expanding.
Yeah. No, dude, that's brilliant, man. So yeah, no wonder this guy goes from you said a few million to
About two, three
I
million
have
dollars to $500 million in a matter of 4 or 5 years.
yeah.
And
That's what are you familiar with Pace Morby?
yeah,
Yeah, I mean he same deal, bro. I remember listening to his he assumes mortgage. He doesn't it's not an assumable mortgage, but essentially he does subject to. He takes over people's but he
mortgage.
went from like, a few houses. I remember seeing him a few years ago to now, yeah, like 400 million dollar net worth in like 3 years, bro.
But he got people on the phone to assume the mortgage.
So what he does, bro, is he started a really cool community called Subject Two, where essentially in the community, there's just everybody very similar to what you're talking about.
They're
Everybody's
bringing you deals.
very giving of their deal. Yep. And so everybody's winning, bro. Like either hard money lenders, right? They have they call it the Gator method, where you're just there in the community, and whoever needs money for the earnest money or for the renovation or for the whole deal, right? But the way they structure, they're very creative with their how they structure their deals, because they can take deals that have no equity, that a realtor can't sell without it coming out of the pocket of the homeowner, right? Because there's no equity. They'll take those deals and assume them, pay the owner who would normally have to come out of pocket, make sure the realtor gets paid, and still keep, like, a 2%, a property with like 2.5, 3%. And what they're using a lot right now is they're using co-living. It's kind of like a property management company, but that does property manages co-living. So instead of renting a house, they rent the rooms, and they restructure the property so that it's got co-living spaces, right? So the living room shared space, the kitchen is shared space, but they cycle through the rooms, you know. And so they're a property that would maybe, you know, maybe the mortgage and all the bills are $3,000, and the rent, it doesn't rent for any more than $3,000. It's not really a good deal. But if they have, 4 bedrooms and they're renting each bedroom for $1,000, now you have a property that cash flows $1,000. And they just take over and so he acquired 2,500 properties in 2 years, bro. But but his whole community is very much like, what is it?
Because the interest rates are so high, so they're just getting them from people, right?
They're just getting, yep, low interest. Where again, a seller who, let's say it's a nurse who bought a house, maybe it bought it in an area that